Meeting will come to order at 5:04. And we have an acting secretary since Naomi is absent today. Jamie Schulenberg will be our acting secretary. So we'll have a roll call.
Thank you. Marcia Cox, acting chairperson.
Here.
Amy Barney, trustee.
Here.
Dr. Fabi Atasi. I didn't write it down. I'm sorry. I'm trying to look.
I guess I'm here.
I guess you're here. Hal Christensen.
Here.
Pat Rooney.
Here.
Julie Sassine. And I don't think we have not done the other. No, that's right. That's it. So we have a quorum.
So we'll stand for the Pledge of Allegiance and a moment of silence prayer. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Amen.
Next agenda item is call to the public. Do we have any requests for call to the public?
It's not given any. Let me just check in the back.
No, I
No. I forgot I was the secretary again.
Sure. So get your roller skates.
That was fine.
And so next agenda item is introduction to new trustees. We have one of our new trustees here today. The other one is on vacation. Some of those use it or lose it days, so we certainly understand that. Julie Sassine is one of our newest trustees. Julie has been with Havasu Regional Medical for 24 years. She's the Director of Business Development and Physicians Relations in the community. I think she'll be a great addition to our board. And we have Amy Barney. Amy is a teacher here at Lake Havasu Unified School District, and she's a math teacher. She's been at the district for 11 years. So welcome, and thank you for serving. Next agenda item is discussion and possible action regarding the interim legal counsel.
That would be me in my other role. Thank you, Madam Chair, trustees. So as I think you all remember, back at the May 11th meeting, the board unanimously voted to conduct a request for proposal for legal services. And as part of that discussion, it was recommended that the trust appoint interim legal counsel. But because that item was not on the agenda at the time, we couldn't take action on it. So we're bringing it back at this time for your consideration. Since the board's been working with Mike Hensley from Jones, Skelton & Hockley on other legal matters and is therefore familiar with the trust, we did ask him to provide a proposal, which is in the form of an engagement letter that's attached in your packets. It actually went to you this morning, so if you don't have that, I can get you a copy. Just to summarize, the scope of services is basically to provide legal advice, review contracts, all of those normal things that legal counsel would do on behalf of the board. In terms of fees, he's requesting $250 an hour for himself and any partners, $195 an hour for associates, and $110 an hour for paralegals. For comparison purposes, Kavanaugh, who is the current law firm, Jennifer Sellers is at $350 an hour. Associates have a range of $185 to $335, and paralegals have a range of $80 to $190. With that, we would recommend that the trust contract with Jones, Skelton & Hockley and authorize the vice chairperson to sign the engagement letter. And I'm happy to answer any questions.
Do you have a motion to entertain interim legal counsel?
So moved.
Second?
Second.
Questions, comments?
So you signed by the chair, not the vice chair, right?
Well, since we don't have a chairperson right now because Carrie's term ended, so Marcia's acting until you guys do your election of officers later on in this meeting. So you could actually make that be the chairperson or the vice chair. I just put vice chair because of the,
Time.
yes.
30 minutes ahead of time.
Exactly.
Hopefully 30 minutes.
Right. I'm sorry, so you want me to roll, yes?
Any discussion on having Mr. Hensley's firm represent us as interim?
Attorneys are necessary. Attorneys are necessary. I'll leave it there.
Well, I've been very happy with the service that Mr. Hensley and his firm have given us so far. He's been accurate, precise. I think his fees that he's charged us to date have been reasonable and precise and very concise. So,
Jamie, when he has to travel up here, does that count? Do they travel on their own, or do we pay for them when they have to travel up here?
You do pay for the travel time.
but that was also included in the other firm's agreement.
Correct. Correct.
So if at some point, if it was depending on the situation, could we arrange phone conferences?
Oh, absolutely.
As opposed to him traveling 6 hours?
Absolutely.
Okay. I think that would be, if at all possible, to do as much business by phone would make it.
And I think in most cases, that's absolutely sufficient.
Okay.
He would probably prefer that. If there's no more questions or comments, let's call for the vote.
Maybe one note, sorry. Sorry about that. Okay, thank you. Dr. Atassi?
Yes.
Amy Barney?
Yes.
Hal Christensen?
Yes.
Marsha Cox?
Yes.
And Pat, oh, Pat's not me. So motion passed unanimously.
Next item is ratification for insurance.
It's the update on the legal request for proposal.
Oh, you're
This
right.
one.
This one. I circled the wrong one. So this is just an update.
Correct, just an update for the board. As we just discussed, you authorized a request for proposal to go out. We prepared a draft that was reviewed by the then chairperson and the vice chairperson that has been finalized. We contacted 5 different law firms in Arizona who specialize in self-funded plans such as yours. Thus far, that has been sent to Jones Skelton and Hockley, Gus Rosenfeld. I did send it to Kavanaugh as well, and Fenimore Craig are the 4 that have responded so far. And then just as an FYI, I did notify Jennifer Sellers that we were taking this action, that the board was taking this action, and I didn't hear back from her, but she is aware, and I did send her the RFP in the event they wanted to continue to provide services. And so the responses are due back August 2nd with a proposed effective date of September 1st. We're going to be proposing a special meeting in August to go over kind of some other items, one of which would be the award of contract for legal services. And again, happy to answer any questions.
And then, so will ECA be presenting those different proposals?
Correct. We'll actually go through and we'll do an analysis and we'll get you all of the costs side-by-side comparison, what the services are, and we'll come back with a recommendation based on all of that information. And we'll give you the whole packet of everything, all of the responses, all of the
And I'm
comparisons.
pretty sure I saw that you'd asked for 3 references,
I believe 5.
or 5 references?
Could be 3, but I think it's 5.
Okay.
Then we did include a standard contract in there so that they could let us know if there's any deviations. So we tried to hit all the points in one swoop.
Right. And are you familiar with any of those other names besides Mr. Hensley's firm?
I haven't personally worked with any of them, but they're all very highly recommended firms. I don't specifically know what their experience is with respect to self-funded trusts. They do have employee benefit practices, so it's just a matter of whether those translate into the self-funded programs like you're offering.
Okay. And all of those RFPs will be, they're sent to you or they're sent to the district?
They're sent to us, and then we'll make sure that the district has copies of all of that on file,
Okay,
as well as the RFP itself.
okay. Good. So we'll be hearing about that, and the deadline's next week.
You'll be hearing about that?
August?
2 weeks.
August? 2 weeks. Okay. So, ratification of insurance,
Thank you, Madam Chair, trustees. We were able to renew the trust stop-loss coverage with Liberty effective July 1st. We originally budgeted 35%, and that was because we wanted to add the coverage for the prescription claims, which, as you know, weren't previously covered. It actually came in at about 59% over the current rates, and that's because in addition to the RX coverage, there are a number of ongoing large cases that were that significantly impacted those rates. I did provide you with a comparison. I know in your packets it's really small, but I put a larger one on your table so that you can see it better. If anybody else wants one, I've got some more up here. We actually went to a number of carriers. I have 3 here on the comparison where they were the only ones that responded. 11 carriers declined to comment, or declined to quote, excuse me, citing a variety of reasons. Large claims, uncompetitive rates, this one right here, you're welcome, or the high loss ratio. So we didn't have a lot of options in terms of carriers. We were able to maintain the specific deductible of $130,000. It's a paid contract, which basically just means that the plan's reimbursed for any claims that are paid during the plan year. We do have several lasers that were implemented. So what that means is that it's that one, the long one, yeah. When you have somebody who's a significant risk, the carrier wants the entity to take a larger risk on that one. So instead of $130,000, you'll note if you look at the option 1 under the blue, the Liberty Mutual, we have a laser of $250,000, a laser of $450,000, and a laser of $175,000. So that's on 3 specific individuals. If those individuals have claims that go over those specific amounts, then the reinsurance would reimburse the trust for those claims. Questions on that? Okay.
So all of those, so those are 3 individuals, and all 3 of the carriers that gave us quote required a laser.
That's correct.
Okay. And is there ever going to be an opportunity, I think I know the answer to the question, but that could be renegotiated?
Absolutely.
Be reduced?
Absolutely. What we'll do every year with those is, best case scenario, they go off the plan. That's not going to happen. So, no, what we do is every year we look at it, and, depending on what the medical condition is, you might find that it was a particular situation that's now resolved or is not as costly. I think one of these is related to prescriptions, specialty medications, if I'm not mistaken. So, as those costs go down, I think a good part of it too was that you hadn't had the RX coverage before. And so I do think there'll be opportunity to negotiate that every year. And I think now that we have the RX coverage in, and I think if we can start to see a shift in the claims in terms of utilization, we'll also have a lot more opportunity in the marketplace aside from just Liberty. So again, this was already placed. And so we're basically just asking trustees to ratify this with an action tonight.
Those three, Jamie, so those are three ongoing claims right now?
Correct.
Okay.
And if I'm not mistaken, one of those has actually dropped off the plan.
And then the other, option 2 and option 3, those are just raising the 130 up to
Exactly.
the 150.
Exactly. So we always look at that. What would it look like if we increased your risk?
Right.
And typically speaking, we like to see at least savings of 2.5 times the difference.
Uh-huh.
And obviously you can see here that that was not the case.
So then we would be looking at the Liberty Mutual.
Correct, that's who we renewed with. That's the carrier last year, that's who we renewed with.
Okay. Except that we added on the RX and
Correct.
because of the claims. And so if it's your understanding that one of the risks has dropped off the plan, is there a chance that we could go back in 6 months and have them recalculate that? Because it sounds like we're going to be paying for that risk for a whole year.
So you really aren't paying for the risk
Okay.
because assuming those claims don't exceed the $450,000, your premium's not really reflective. Your premium reflects the fact that they're taking less of a risk on that person.
Okay.
So if that person's dropped off, in essence, you got a better deal on your monthly rate, if you will. And so really, it's not a bad thing.
So the biggest hit for that is obviously that RX.
Correct.
And we kind of knew that going in.
Do we know which one of those three dropped off?
I believe it's the $450,000 one.
Do we know why they dropped off? I mean, that would seem like it'd be a pretty tough decision if I'm the person being insured.
I believe that they left employment. I'd have to go back and look at that.
So we don't know if they're on COBRA or...
Not on COBRA.
Okay.
The only reason I know this is because they're on case management, and I got a final report that indicated they had gone off the plan because they had other insurance elsewhere that was
Okay.
equal to or better.
I see. That makes sense. Okay, so we're just ratifying that premium at
Correct.
53% increase instead of 35.
And it does require a vote.
Make a motion, we ratify. Second.
Call for the vote.
Dr. Atassi?
Yes.
Amy Barney?
Yes.
Hal Christensen?
Yes.
Marsha Cox?
Yes.
Motion passes unanimously.
Item 9 is actually approval of meeting minutes for 6 past meetings, which is a little unusual. Not
Very
quite sure.
unusual.
Actually, it's very unusual. Not quite sure why or what, but we do have all of these to, well, I think they were all submitted or sent to everybody.
Yeah, another thing, I know, speaking for myself, I know I reviewed all of them and communicated back and forth. I know Marcia had made some comments back and forth too, so I think they've all been reviewed. They just haven't been approved through the
Correct.
board. You know, I don't, Amy hasn't had a chance to look at, have you looked at any of those?
I did read them, but I'm not going to vote on it because I
Right.
wasn't at the meeting.
Sure.
I don't have any reason to. No.
All scintillating information.
It was exhilarating.
Oh, it was. It'll cure insomnia. I make a motion to approve the minutes as outlined.
I was second that.
Questions, comments?
Madam Chair, if I could just add one thing. We learned today, and this is just for information purposes, we learned today that none of these meeting minutes had been uploaded onto the district's website. So just for the record, those have now been updated and are available for review by anybody who would like to read them.
Had they not been uploaded because they hadn't been formally approved?
No, you always upload the unconfirmed, and then
Okay.
once they're approved, you replace them with the confirmed. So I think it was just a snafu and staffing and what have you, so we'll ensure that that happens going forward on a regular basis.
So Mary left in January, so I think we can blame her.
Exactly.
She didn't tell Naomi what to do.
That's
so,
right.
all right.
But going forward, you know that may be taken care of. Okay. If there's no more questions, then we'll call for the vote.
Dr. Atasi?
Yes.
Amy Barney?
Not voting?
Hal Christensen?
Yes.
Marcia Cox?
Yes.
So passes by majority.
Should probably go to 11 until Mike gets here.
He's here.
Oh, he snuck in.
He's stealthy, man.
He snuck in.
My duty.
That's right. That's right.
My duty to be quiet.
Engineers and accountants are so
CPA. and they just kinda
Under the radar.
Sneak in. Item 9, or no, 10. You got me all flustered there. Item 10 is approval of December 17th through June 30th financial reports. This is what happens when you have quarterly meetings. All this. There's a lot of reading. Not that I want every month, by the
Thank
way.
you.
Yeah. That's not what I'm advocating.
Is this, Madam Chair, is this where you want my presence now?
Yes.
Thank you, Madam Chair. I do apologize for the confusion in my attendance being required at this meeting. The reason for that was my cardiologist told me to avoid stress, and this is one of my most. Sorry, Dr. Tess.
Well, not knowing who your cardiologist is, I don't know.
I don't have all of those financial statements that you just mentioned, December 17th through June of 2018 with me, but administration has been provided with all of those statements through June 30th, 2018. I assume that they have been forwarded to the board, and I hope you have the June 30th financial statement.
Yes, we do.
I just want to take a couple of minutes and briefly review the June financial statement, since that's what I came prepared to talk about. And it's the trust fiscal year end, June 30th. On the balance sheet, and these are prepared on the cash basis of accounting that I spoke about at the last meeting that I attended, which was several months ago. On the balance sheet, the investment account at Wells Fargo has a little over $2.5 million as of June 30. The checking account, which is the operating account, that's where most of the funds get deposited, the contributions from the district and other contributions that come in. And that's where all of the claims paid and all of the expenses are paid from. At June 30th, that had a balance of a little over $1 million. All of the fixed assets that was an issue a couple of years ago with the audit, some of you board members that were here recall that. Those have been fully depreciated, so they have zero book value. They're still required to be carried on the balance sheet until they're disposed of. So there are no liabilities, again, on the cash basis. And when I was here the last time, I spoke briefly about preparing the financial statements on the accrual method, which in your instance would, about the only difference would be recording the accounts payable that were received or incurred as of June 30th of each year, or if you decide to go monthly with the accrual, it'll be on a monthly basis. And the incurred but not recorded claims, which is always a big issue at audit time, to get that information and properly record it. So there's always an adjustment between the financial statements that you review at your board meetings and hopefully approve. There's always an adjustment going back to that June year end to record those accounts payable and those incurred but not recorded claims. That was probably the primary reason of considering going to an accrual method. Our firm receives the accounts receivable on a regular basis, those bills that are incurred. Naomi forwards those to our office. We have not recorded them because that has not been the practice in the past. We could easily start doing that if that was the direction of the board. The incurred but not recorded, I have to defer to Jamie, right, and Aaron's group to provide that information. I will suggest that the board give serious consideration to taking that approach going forward on the financial statements. In my opinion, it provides a more accurate viewpoint, if you will, of what the financial statements are saying. What debt you actually have incurred, i.e. the accounts payable. You really don't have any accounts receivable to be concerned with, but certainly the incurred but not recorded. In the fiscal year ending June 30th of 2017, it was about $316,000 as I recall. So that has a negative impact on these financial statements that you're looking at, and hopefully we'll approve all of those this evening. Moving on to the statement of activity, which is basically a profit and loss statement. I think everything on that report is pretty self-explanatory. During the course of the year, through discussions with the board and with the staff here at the school, we rearranged some of that revenues so you could get a better idea of where that revenue is coming from. For instance, the school district made an additional contribution this fiscal year of $653,000 in addition to the normal contributions of $4.349 million. So $5 million in contributions from the school district. The other largest contribution is from dependent contributions of about $862,000. And stop loss that you were just talking about earlier was almost $600,000 in this most current fiscal year. Your total revenues were $6.9 million. Your total expenses were $1,046,000. You had other income, dividend income of about $176, interest income of about $9,500, and unrealized gain or loss on your investments of about $3,700. What that unrealized gain or loss on investments represents is the difference between the market value of the investments in that Wells Fargo investment account and what your cost basis is, what you paid for it. That changes each and every month based on the fluctuation in the market value. Generally accepted accounting principles requires you to carry the cash balance, your cost balance on the balance sheet as opposed to the market value that fluctuates. So that's how we reconcile those. Before I go there, for the fiscal year ending June 30th, 2018, you ended up with revenues over expenses in the amount of $1,060,000 roughly. To prepare for the meeting, I ran a little comparison of year over year. Because we changed some of the revenue, the way we recorded some of the revenue, the year to year on specific revenue items is irrelevant, but I just wanted to give you some information on the total revenue and total expenses. Your revenue for the whole year was down about $547,000 from 2018 to 2017. The operating expenses were down about $845,000. The net, therefore, is about $839,000 less this year than it was in the previous year. Dill solvent, you have $3 million in the account. No concern from an accounting standpoint or even an audit standpoint. And that's one of the things that the auditors look for is the solvency and going concern, which I won't get into. I have a little breakdown, if you want that, on some of the expenses that has come up in the past and some of the meetings that I've attended. You have a commission expense of about $44,000. That was all paid to Arizona Healthcare, the previous administrator, for the lack of a better term, right? On the consulting fee, $552,000 roughly, that was all paid to Gilspar. Benefit management, $815,000, that's all to Cerner. I just want to point out briefly under the professional fees, you'll notice the least amount paid in professional fees. I just want to bring that to your attention, who that was. Legal fees of about $24,000.
You get what you pay for, right?
I'm sorry?
You get what you pay for.
You get what you pay for, that's right. And sometimes that person arrives a little bit late. You reviewed the request for proposal on attorney's fees. You paid Kavanaugh about $8,700 last year, Jones, Skelton, and another guy, $15,480 roughly. That would conclude my report, Madam Chair, and I am happy to answer any questions should the board. Before I close, one more thing. You've looked at some contracts here this evening. I just want to bring to your attention the contract that you have with our firm to provide these services technically expired June 30th, 2018. If the board decides that it wants to go forward and outsource these services, we would be happy to provide an engagement letter, or if you want to put it out for an RFP, we'd be happy to respond to that as well. If the board decides to do that, you probably should do it sooner than later, since the July statements will be, the information will start flowing. For those of you who have not been here all the time, for the new board member, the ones that are here will recall the reports that you received prior to outsourcing it and the reports that you're getting now. I'm not hesitant to say how proud I am of what our firm has done over the last year and a half. Probably it's been about that long, probably. And being able to provide the board with meaningful financial statements that you can make informed decisions on. Just if you want me to do that engagement letter, I'll be certainly happy to do that in the next week or so. But I just need some direction from you. And if the board wants to have discussion regarding the method of preparing those financial statements, cash versus accrual, certainly let us know. And if there's anything that I can do to assist in that decision-making process, I am available. Any questions?
Does your current engagement letter with us, Mike, have an automatic renewal or any kind of extension of any kind?
It does not.
Okay.
Typically, they do not. When we enter into engagements, whether it's for a tax-exempt or a nonprofit organization or a for-profit, they're typically annually, and we renew them usually prior to when they expire.
So we would need to add that as an agenda item for the next meeting. And
I already did.
And if we did go to accrual, the fees would still remain the same, right?
Did I say that?
I'm asking you.
I can keep the fee the same as it is, or has been this past year. The previous year, when I replied to the RFP, I didn't know what we were getting into, quite frankly.
neither did we.
Neither did you, exactly. But as I said, we made great strides in making the information understandable and useful to the trustees. I did increase it $50 a month from the previous year for this past current year. I won't do that this year. And whether you go cash or accrual, if you go accrual, it's a couple more entries for me. You know, a couple more minutes of my time.
And in your opinion, the accrual is a better picture of where we are because we have the incurred but not reported that can be...
As well as the accounts payable. It's a more accurate picture of the financial condition of the trust at any given point in time. I believe that it would make it a little bit easier on the auditor as well. That information is therefore included in the financial statement that is provided to the auditor at the time they audit the school district. You'll recall a couple of years ago, the trust had its own audit separate from the district's. This past fiscal year, they did not, correct?
No.
It was included in the district's audit. But they still have to audit the trust as part of the district's audit because it is part of the school district's operation. So our firm provided them with bank reconciliations and other documents that they needed for to perform their audit procedures. Those two pieces, the accounts payable and the incurred but not recorded, were missing, obviously. So we had to wait to get that information and then provide it. And then we have to, 6 months after the year end, when the audit is completed and we know what that number is, we have to go in and make an adjustment to the financial statements, backdated, if you will, back to, in this case, June 30th, 2018. If you had that information on a regular monthly basis, there would be no need for that.
So that would save a little bit of time
On the back end,
on the back end.
certainly.
And did we ever come up with an answer on the unrecognized $144,000?
We did not. We made that adjustment. The auditors reviewed all of the work papers we provided, and honestly, they didn't have an answer either. So it was recognized in the prior fiscal year, and it was recognized on the financial statements that we prepared after that date, after the audit was completed.
And in your opinion, as a CPA and having experience in working with organizations, when you see something like that, is there any way to find that information? I mean,
I can tell you that our firm and me individually, as well as staff members, looked at that in great detail to try to determine what it was, but it occurred way prior to the records that were available to us at that time. The auditor, again,
so there wouldn't have been any way to get it from the bank?
And not speaking, no, because it was like 3 years ago.
Okay.
And not speaking for the auditor, because each auditor has its own procedures and its own policies that they have to follow. But what is uniform is what's called a materiality factor. That materiality factor is used in several instances for preparing an audit. One is for the transaction amount, as well as the overall financial statement. And that materiality factor is determined, there's a formula to determine what that is, and it's based on assets and it's based on a lot of other factors. $140,000, quite honestly, in the case of the school district, is immaterial when it comes to the audit. So unless it was $2 million, they wouldn't spend a lot of time in trying to determine where it came from and the why. They just looked at it and said they took the information that we had and made the reconciliation under our recommendations. I know that's not a very good answer for you, but...
Sure. So when we had hired Mr. Bonney's firm, it's been 18 months, almost 2
I think so.
Yeah. Prior to that time, the trust was not using the accounting firm to do any kind of reconciliation, financial information, and what we were aware of at that time was that there had been a period of about 2 years that there had not been any kind of bank reconciliation, check reconciliation of any kind at the district specifically for the trust dollars, and so that was troubling, to say the least. And during this process of being able to account for everything, there was an unrecognized amount of money of $144,000 that, because we didn't have any way of knowing what checks were written, there was no bank statement, there was no bank book, so to speak, and we didn't have any way of being able to find that out because it was more than 3 years prior to that. We had no way of being able to find out where the money went, so to speak. And so I kind of been beating a dead horse for the last 6 months trying to figure out.
Unfortunately.
Where, you know, I mean, because it's the trust money, and it's money that is, you know, supposed to be used for, you know, paying claims and taking care of the district, and I guess I wanted to kind of hear the final nail in the coffin, which is, I'm not gonna get it.
The final nail in the coffin, to use your words, is it's done and over and let's move on. We can't determine where it came from, unfortunately.
Which is unfortunate.
It's very unfortunate, and
Because it's not a lot of money in the scheme of, you know, millions and millions of
and I
dollars.
didn't mean to
but it is a lot of
minimize.
money.
I didn't mean to minimize the amount when I was trying to explain the materiality factor when it comes to an audit. Certainly, $140,000 with an organization of this size, $140,000 is a lot of money. When taken in context of the entire school district, however, it isn't
Mike,
true.
and wasn't it true that some of the possible explanations could have been something double-entered, and not that somebody walked off with $140,000?
That's absolutely correct. That is absolutely
That's what I just wanted to make that.
And to go back,
We
even
just didn't know.
We didn't know, yeah, we'd
That
like to
is
know,
correct.
we'd like to know where it went, but it.
in all likelihood, based on my experience, and again, I couldn't find the answer that you're looking for. I wish I could have. I could have increased my fees double probably, but.
Well, and I think it was a process of, you know, when we started going through all the discovery of this, starting 2+ years ago, you know, we were trying to get, you know, volumes of information and, you know, going back 30 years. And so every little thing that we had resistance with our prior consultant, it was just one, you know, wall after another. And so it was, you know, you just.
Well, and if you'll recall, Madam Chair, for those
So
of you that were on the board at the time, you didn't receive a financial statement like this. You didn't receive a balance sheet or even a statement of activities or
Right.
or a profit and loss statement. You
Right.
received a spreadsheet that showed what came in, what went out.
Right.
In some cases, it wasn't even an outstanding check.
Right.
So I think,
Well,
Mr.
by far,
Christensen-
this is much.
Yeah, I think Mr. Christensen is more accurate that the answer lies in maybe double posting something and it didn't get caught. We had an issue also this time last year with some long overdue outstanding checks that had, you know, during that bank reconciliation process and us, the transition into our firm doing these. We went all the way back, even though we didn't start until mid-fiscal year. We went back to the beginning of the fiscal year, reconstructed all of those transactions, and came up with a lot of outstanding checks that had not cleared, that had been more than 6 months old. And we had a meeting here with Mr. Murray and Kelly, and determined that she went through and searched her records, and we went through ours that we had and determined those checks are never going to clear, so in some cases wrote different checks and voided out those old checks. That could have been part of the problem, quite honestly. I wish I had a better answer for you.
I think that's a fair answer.
Thank you.
And I appreciate, you know, having the financials. To me, it helps us to have a better, more accurate picture of where we are, and not having that in the years past, I think, was always troubling for me. So, and I do appreciate the good work that you've done.
Thank you.
Do you have a question?
Madam Chair, Jamie, Mr. Bonnie. I don't know if anybody has the answer to this question since Mike's not here. Can somebody confirm if the 2.5 million account, if that's the retiree account, and the $1 million checking account is the
I can
account?
address it from my standpoint.
Okay.
The financial statements do not segregate the retiree funds from all of the other contributions. It is simply a segregation of operating account and investment account to be better, I don't mean better, to be good fiduciary stewards of the finances, if you will. That's the board's responsibility. Previously, is my understanding, there never was really an investment account. There was some controversy over how School funds can be invested, they have to be very secure, obviously, and things of that nature, but there's not, to my knowledge, there's not a fund that segregates retiree contributions or money sitting in a pot that says retirees.
I thought that that had been discussed.
I think at one point in time, there was an account that they were calling a retiree account for GASB liability purposes, but the funds that were in that account weren't in fact sufficient to cover that GASB liability. And I think as time went on, it really was just an investment account. I don't think there is to my knowledge, a retiree account no longer exists or never did exist in reality.
Okay.
And if I remember correctly, I don't think that there was a formal instrument created to lock that money up, so to speak, specifically for retirement. I think it was just identified as that type of an account. So it was liquid.
So I guess my question would be then if we're going to look at that, or if we even have a way to do that in the future. And then, because the last presentation that we saw at the PAC, I believe the retiree liability was 14 to 18 million, the unfunded liability that we have. So at some point, would the board, would the trust consider looking at that, or do we not have enough money to designate an account for? Is that what
So
I'm
the
hearing?
GASB liability is actually the school district's liability. It's not the trust liability. It has to show on the school district's books. I do know that the actuary, Mike Shunning, is working right now with Mike Murray
Okay.
on performing that analysis. And my assumption is that once that analysis is complete, then we'll move into the discussion of now what do we do? Now that we know what that number is, what do we do?
Okay.
And how do we get to where we need to be?
Okay.
I think that's a valid point, that
Thank
it actually belongs on the district's financials as opposed to the EBT's financials. It's actually a school district liability.
Well, I think once Mr. Shunning finishes his work with Mr. Murray, I think I will, just based on the work that I've seen Mr. Shunning do so far, I'll feel very comfortable that the numbers that will be presented will be very accurate, because the unfunded liability numbers prior to working with Shunning and ECA have been kind of all over the board and just very sort of in a gray area kind of a thing. I don't think they've been accurate at all, and they might be shocking, unfortunately, but we've kind of been shocked in the last 6 months about a lot of things. But I think the point of going through this whole process is, even if the information isn't what we want to hear, and maybe it's bad, maybe the numbers are higher, the rates not whatnot, we're getting good, valid, accurate information that we can deal with and that we can work with and that we can make good strategic decisions and plans with. And if the number's 14 million, then that's something that we can plan with. So. So as far as adding something to the agenda for entertaining an additional letter of engagement, can we just add that as an agenda item?
Yeah, I've got it written down as a future agenda item, and then we can talk about whether we need to do that in sooner than August. So we can just talk about that strategically. We don't have to do that right now.
And then can we ask, Mr. Bonney, can we ask your firm to extend your engagement letter until we can?
With an amendment.
Yes,
Thank
you
you.
can ask.
Will you answer?
Yes, I will.
In the affirmative?
I will answer in
Thank you.
the affirmative, yes. I'd be happy to,
Thank
Madam
you.
Chair.
And then
Thank
do
you
we-
for the opportunity, I appreciate it.
Thank you. I appreciate it. Do we also need to add an agenda to discuss the accrual
Accrual
versus
versus
cash?
cash. Okay.
So we need to entertain a motion to approve the December 17th through June 30th financial reports. Do we have a motion?
Motion to receive them or approve them?
Approve them.
Okay. Motion. Second. Well, some of the boards I sit on, they don't approve them, they receive them, and then they put them in to record. That's just, old Robert, he just drives me crazy sometimes.
Robert's rules?
Yes. Good old Bob.
Or you can accept.
Yes.
Don't give me another option.
I know. So what is the proper thing to do? Is it to approve them or to receive them?
Or accept.
All of my trusts that I work with approve them, but I think I'd be happy to ask Hensley what he thinks.
Semantics.
Right.
All right. Well, let's take a vote, and then you can ask Hensley. Since we're kind of going well along that line today, so we'll go with status quo today, and then we can change it.
Yes, yes. I have a whole list of things to talk about with the new
Do we have a
chairperson,
second?
so- We did have a second.
Yeah.
Okay. Call for the vote.
Dr. Atasi,
Yes.
Amy Barney,
Yes.
Hal Christensen,
Yes.
Marcia Cox.
Yes.
Motion passes unanimously.
To approve your work. so.
Thank you, I appreciate it. And with that, I'm going to
Not that you needed that.
Yeah, dismissed.
Exit
Thank you.
stage left, yeah. Be careful out there, it's hot.
It is.
Next item on the agenda is vendor reports.
Hello, everybody. Madam Chair and trustees, I'm going to go ahead and review the 2017-2018 medical plan, just ended on June 30th, 2018. So if you have your packets in front of you, I'll go ahead and start with slide 1.
Do you have?
Yeah.
Mrs. Assigner, did you get a copy of that?
I think so, yes.
All right, so I'll go ahead and get started.
This was in that email link, that there's copies back there.
Did everybody get a copy?
Yeah, it's really small.
Yeah. Because I was going through it, you know, that's just kidding.
You'll never see it.
That's not going to work on your phone. That would be really challenging.
That was funny.
All right, let me know when y'all get to that page and I'll go ahead.
Are you on page 1?
I'm on this page.
I don't know what page that is. What page?
Slide.
Medical plan review, slide 1.
Awesome.
Yep. Ready? Okay. All right, I'll go ahead and get started. So slide 1 is going to be the medical plan review, and this is going to be on issued claims. We have 2 grids on this one. It's paid dollars and then paid dollars broken down on a per member per month basis. It also gives a 4-month comparison so that we can see trend in there. So we have all the way back to 2014, all the way to the 2017 plan year. So I'm going to go over the 2017-18 plan year, which is the bottom line there on the $8. What we do is we take a look at those medical claims, and then we add in all the fixed administrative costs, and then we subtract out any spec claimants. So like Jamie talked about earlier, those spec claimants who reached that deductible and got reimbursements back. So we include those in the factor 2, and then we result in a net plan cost. So we ended the year in 2018 of June, about $3 million in claims expenses. That includes your fixed costs. We have received, or the trust has received, about $601 in spec claimant reimbursements so far. There's $927,000 is the total that's been filed. So there's still some claims out there on the spec claimants that hasn't been reimbursed yet. So those were just filed just in July. So we're still waiting some of those funds to come back. So overall, paid in excess of spec deductible, received is about $601,000 so far. There were 5 spec claimants. That's why that cost was so high. So then we broke it down on a per member per month basis for those costs. The net cost is about $317 per member per month. So we're talking about every single person covered underneath the plan. That includes your spouses and children. So that's about $317 per month, and that's how we ended the year for 2018.
And do you expect to get the balance of the 927?
Absolutely, yes.
Okay.
So, yeah, they've been filed, we just haven't received it yet.
Okay,
Late June, July, those were filed.
okay.
Next slide over is going to be the Pareto analysis. Let's look at the very first line for claims in excess of $15,000. Basically what this is saying is you have 32 members, so 32 people within the entire population have issued dollars a little over $2 million, so about $2.4 million for 32 members or claimants. That's 79% of the total issued. That's 4% of your population. So that small percent of your population has the largest expense. So that's what this is telling you. And it is just a little bit below the Arizona benchmark. So 4% of the population, the bulk of the cost. Questions on that? All right.
And the number of, the numbers of members, that's, again, that's employee, spouse,
Yes.
everybody.
That's claimants. Okay, so slide 3, we have your top major diagnostic categories. Again, this is medical claims only. This doesn't include, this whole report doesn't include prescriptions, okay? So it's medical claims only. Top category is going to be your neoplasms, your cancer category. Issued dollars, right around $557,000 for the year. Broken down by per member per month, on average about $57. It's well above the Arizona benchmark at $28. There is, I know there is one member in here that has lung cancer, so that was a high dollar claimant in that category. Number 2 on that list is going to be your circulatory system, which is right around $462,000, $47 on a per member per month basic, on a per member per month. And then you have your influencing. This one is a catch-all category. It's going to be anything from preventive care to maternity. So that's the influencing health. Number 4 is your digestive at $280,000 at about $29 per member per month. Overall, for these categories, only for these top 10, $295,000 was total issued, averaged about $30 per member per month, which is well below the Arizona benchmark at $68 per month.
I had a question on slide 1.
Okay.
You show that the cost is $317 per member, and then on slide 3 it shows $322. But the issued and the claims of $3,141,000, those numbers match. But then I'm just curious why the cost is different on the 2 different slides.
It looks like the paid in excess wasn't subtracted out of this one.
Oh, the excess expected, well, that could be the reason.
And fixed costs not added in because it matches medical claim.
That's correct. So the medical claims issued is a 3141. So slide 3 does not include the fixed costs. No. But it's still higher. So I can look into that one. I don't have an answer right off. All right, so we'll go to slide 4. This is the employee versus dependent claims, medical claims only. This is going to illustrate your population on which network your providers are using. We have 70% of the employees are using the Blue Cross network, so 70% of total issued claims is within the Blue Cross Blue Shield network, which is great. We have your spouses at 27%, and then children at 3%. This is a percent of issues. So your employees are the bulk of the cost on this plan. Questions on this slide? All right, the discount evaluation, I'm sorry, on the other plan, on this other page I talked about discounts. This one is actually the discount evaluation. So slide 5, discount evaluation. This one is going to illustrate how your employees are using the Blue Cross Blue Shield network as opposed to out of network. So under Blue Cross Blue Shield, we have 97% of eligible claims are running through the PPO network, which is really good. Of those claims, you're getting at least a 52% discount through the Blue Cross Blue Shield network. So really good discounts there. With PHCS as a secondary network, it was less than 1% of claims. That's why it says 0. So this report is going to round to the nearest percentage. So it was less than 1% on PHCS, but you still received a 40% discount, which is still really good for PHCS. And then we have some out-of-network utilization, and this one is going to be for your radiologist, anesthesiologist within an inpatient hospital stay. So typically when you're inpatient, you don't have a choice of your anesthesiologist or your radiologist. Sometimes most of the time, they are not contracted with any network provider. So that's where that out-of-network comes in, even though this plan does not have an out-of-network benefit.
And what is PHCS?
PHCS is a network that's part of MultiPlan, so it's a secondary network. Slide 6, this is your employee-employer cost share. So the top grid is going to be your employee cost. So if you look at the total, it's the gray area. Total employee cost was right around $614,251, which averaged about $63 per member per month. And then if you look down at the employer cost was right about 3.1 million, roughly $3,091,000, which averaged about $317 per member per month. So if you average that out on a percentage, 17% of the cost is the employee cost share, and then 83% for the trust. Looks like it's on a kind of an upward trend. You know, going back to 2015, it was at 13%, went up to 15%, and then ended the year at 17%. So a small increase in that percentage for the employees, and then a decrease for the trust. So it went from 87% to 85%, and then down to 83% to end the year.
And Jamie, this question is for you. Is typically the I guess the targeted ratio is like a 25-75, or is it 20? I mean, is there sort of a sweet spot where you want to try and keep those percentages with employer?
I think 80-20 is pretty typical.
Okay.
But I think that that's a question, you know, as we're strategizing for the future, that we should work with the actuary on. What should that number look like, and how do we get there?
So I'm trying to remember did we have a significant change in the deductibles between 17 and 18?
Not that I remember. There hasn't been any plan changes. So the plan setup has been the same since I've been with the group. I haven't seen any increases or decreases.
So we just had more utilization?
Right, or even the employee count, member count could factor in there as well.
Right, except in 17 we had fewer people. Well, fewer total, I guess.
So slide 7, this is your inpatient admits. This is going to show you the facilities that members are utilizing. We have Havasu Regional Medical Center. We have 32 admits. The average admit at this facility was right around $5,613. Second in line is going to be Mayo Clinic. So, you know, if you look at the cost there was only 4 admits. But the average admit was $45,000, so Mayo Clinic is very, very expensive. This one, we had a patient, this is the lung cancer patient, utilizing the Mayo Clinic, so that's that one. Number 3 on here is going to be Spring Valley Hospital, 2 admits at around $26,750. Banner Good Sam, 1 admit at $34,000. And then we have Southern Hills Hospital, 1 admit at about $34,000.
Now saying Mayo Clinic is obviously more expensive on here, but a lung cancer admit's gonna be more than a local admit that you go to your
Yeah, it depends
local.
on what they're being treated for too.
So it's kind of
just-
hard to compare necessarily.
Yeah. And Mayo Clinic just became contracted with Blue Cross
Okay.
last year, so that's new to a lot of our clients
That's
now.
amazing.
So,
I didn't think they'd ever do that.
yeah, so that's brand new. They just did that. I think it was May of 2018, Jamie, or 17?
I think
It's been a year.
it was 17.
Yeah, 17. So it's been a year. A lot of groups, they didn't advertise it, that it's now, contracted. They kind of just left it. But yeah, that's new to a lot of our groups.
And the admin is mainly the inpatient, right? Not only outpatient, not outpatient services.
Say that again?
Just the inpatient, right? The admit.
Yeah.
Okay.
Mhm.
So there's a high probability that admit into Mayo couldn't be treated at Havasu Regional.
Probably not. I mean, it's hard to say, I don't know. Slide number 8, this is going to be utilization analysis per member per month basis. And this is breaking out your office visits, inpatient hospital, routine wellness and emergency hospital. This is based on dollars. So office visits are on average throughout the 3 years, about $5 to $6, which is below the Arizona benchmark at $14. Inpatient hospital stay, kind of an increase throughout the years from 15 to 17, $45 and $59 per member per month, and then $67 inpatient. So kind of an upward tick on that inpatient hospital. Routine wellness for office visits, that just stayed on par at $3 for the last 3 years. And then emergency hospital, this one, a small decline over from 2015, so from $42 to $31, and then $32 in 2018. So that one was a small decline, a little bit above the Arizona benchmark at $26. And the next slide is going to be kind of the same analysis, except it's going to be on number of visits. So the number of admits or cases. So again, like your office visits, this is on par with the prior 2 years. Same with inpatient hospital, 3 years just kind of stayed on that straight trend. Routine wellness and office visits, the participation or the visits increased 19% from the prior year. And then emergency hospital, that one just kind of stayed on trend as well too.
On the routine wellness, are you talking about physicals, or are you talking about like the preventive, the 994?
This is going to be anything preventive care.
Okay, so not just physicals.
And it's not only to the wellness center here, it's just like any.
Yeah, this doesn't.
Yeah, no, this, yeah, not at all for the clinic. This
Which is interesting because, I mean, interesting.
And then just some statistics on customer contact calls and the mydilfar.com logins. It's kind of up and down just depending on the population. We have about 95 for the month of, it goes by month, so how many calls come into our contact center from the members. And then the logins for mydilfar.com looks like it's all over the place. It goes anywhere from 268 all the way down to 97. So really want to increase those numbers on mydilfar.com so we can also provide some marketing materials and information for the employees to really get in there and log on and look at their information. So just some statistics on the last page. And that's the end of the presentation. If you guys have any questions for me?
I have a question on slide 9, the office visit and the wellness visit. They are not included, right? Like the one for the wellness visit are not included in the office visit. They are separate, right?
No, they're
So how do
separate.
you
So
differentiate
it's-
between?
Yeah, so there's an office visit and then routine wellness. We wanted to break out that preventive care to see how many people are actually going to their physicals and getting treated before, these big issues arise. So those two are broken out separately.
So how do you know if someone went to, for the code, like if someone went to the visit, the
Yeah.
CBD code?
So the top ones are going to be the 919 sick visits, so to speak, and the physicals are going to be on the bottom.
Yes, they're all coded separately. If it's a sickness or if it's routine, it's coded as R. If it's a sickness, it's coded as S. So those are two benefit types that we have to differentiate from the two separate office visits.
On the Gilsbar logins, the spike for January, you think that's probably, do you know why they're coming in? Is it to check deductibles or?
In January, let's see here.
summarize your stuff for taxes.
That's
That's why I logged in.
I'm thinking, yeah, maybe that's,
It could be a number of reasons.
yeah, because April went up to.
To 167 in March. Maybe getting towards the end of the plan year or the school year, coming into summer, kind of making decisions on where they are, deductible wise. Or maybe looking at their claims to see for flexible spending accounts, they can see their balances in there to see how much they've spent out of pocket. So a lot of different reasons why people log in there. We definitely like to see that number go up.
And typically, what are the customer contact calls for? What kind of calls are you getting?
Those can be anything from coverage to questions on an EOB. It could be questions on eligibility, or maybe they're trying to pick up a prescription and they're having an issue getting it. It could be several different things why they call into our customer contact center. It just, eligibility seems to be the biggest one, if they can make changes and when they can make changes. Coverage is a big one. What's my deductible? How much of my deductible have I met so far? Maybe they have a surgery coming up and they want to know what their out-of-pocket is or have a ballpark. So those are some of the questions that we get.
Now, with the new change, the integration with the payroll system, where is it, all of that's going to be, I don't remember what the software program's called, but Visions. Is that gonna, that would have another layer of, because that has the eligibility part in it. So I'm wondering if that's gonna drive calls down to you.
I don't know that we have not implemented that yet. I know there was talk about getting the system.
Yeah, I'm not sure that you would be doing that, because I think it's gonna be
The first payroll is July out of the new system.
July.
So, yeah.
I was in there today, and you can see there's a place where you can click to look at it.
Okay.
It's just not in there yet because
Okay.
that's something we talked about. But it's exciting to be able to see.
So what I'm wondering is if you're able to go into that program, would you also be calling, calling Gills Bar for,
I mean, it just depends on how much, I would think that it would depend on how much information is in that system.
right,
And level of
How much it's
familiarity.
drilled down
Right.
for eligibility.
right. Right. Is there a way for us to find out, I know one of the bugaboos that we've heard a couple times with the out-of-network providers, the radiology, the providers that are doing interpretations for radiology over at the hospital, is there a way to get a list? I know that they've got the names of the companies that, contract for that, and find out if they do accept our plans, or if, my concern is that we've had a couple of employees say that they got surprised with having that extra deductible and whatnot, and so, being prepared for that. Is there a way for us to be able to find out if they're in network?
So the member is going to a PPO facility.
Mhm.
So basically what the member does is they would ask their surgeon or their doctor who they use for their anesthesiologist, radiologist. And then it would be up to the member to ask the provider if there's
Right.
somebody else that they could use. We don't have a list of those non-contracted providers. It's kind of, the member is at their mercy of the physician that they're using inside the PPO facility. They're still considered at the in-network level, but again, that's going to drive up the cost to the member in terms of their deductible and out-of-pocket. I'm sorry, their co-insurance.
Right.
So it's kind of hard to tell. We don't have any listing of non-contracted radiologists, anesthesiologists.
Are there any contracted available at our hospital?
Well, I'm not sure. I know I had a mammogram done there not too long ago, and they gave me the name of the company that provides the radiologist. So I'd be curious, I can send that to you, maybe you can look at it, because I
I would say
think
that
that would
there
be nice to
are
have that.
contracted providers, only because it's less than 1% that was about radiologists and anesthesiologists.
Right.
And there was so many inpatient hospital stays.
Right.
So there has to be contracted providers out there.
Right.
I'm just trying to
Because
imagine me going
for
to
the
my
whole
surgeon
year.
and being like, can you use a different anesthesiologist?
Yeah.
I know you're used to using this guy. I don't see that conversation going now.
Yeah, for
You don't know
example,
what they're gonna do when you're asleep.
we were going in to have
I
a
want them
stent
with who they're comfortable
procedure.
with.
Right.
And we did ask, you know, I want to know who your radiologist is, your anesthesiologist, and they had 2 to choose from, and neither one of them were in that network. So it's kind of, you're at their mercy, pretty much.
The good news here in our hospital is only like one group of anesthesiology, one group of radiology. There's no other groups, so,
Right, so they're either on or not.
yeah, exactly. The whole group you can change actually.
Right. You're held hostage. Okay.
All right, any other questions?
Thank you. And I understand Rich Hanna is not here.
Correct. Rich Hanna had an unforeseen medical situation arise, so he could not be here. You do have his report. I'd be happy to put on my third hat and give you some of the bullet points that he shared with me.
Sure, why don't you do that? That'd be great.
Nothing too exciting here. The claims have remained stable. The year-over-year total spend is down by about 12.7%. There are some high-cost months in there that you'll notice in January and July, which is really common. That's when you know, you're on summer break or winter break, and so you tend to see those claims go up. There's total network and claim savings of about 42%. The employee cost share is 12% of the total benefit spend. The benchmark there is 20. So here we're seeing a lesser spend on the employee side than you would see in other plans. Preventive services are accounting for 48.5% of the total spend. That's really good. The largest outlier among the categories was oral surgery, which was 11.1% of the total spend, and the benchmark's about 7%, so a little high on that one. 99.7% of all the claims were in network, in the Emeritus network, so that's really good. Dr. Carver's office is the top utilized provider, and the top 25 providers accounted for 95% of all the claims.
That's been pretty consistent like that for several years.
Yeah. Yeah, nothing, really nothing of note here at all. Right on par with what we've been doing. And we don't have it on your agenda, but the clinic did provide a report as well. I sent that to you this morning, so you do have some slides in there on the clinic for your perusal as well. And I've got additional copies of that here too.
Did you make, I was going to say, do you have copies?
I do have copies. Somewhere, here they are. They're in the packets that were up front, but I also have a little stack here if anybody wants them.
So for the clinic, this was basically just utilization, no statistical data on types of services, diagnostic or diseases or whatever, but
Correct, it's their utilization overview, so how many visits
Right.
per month for January through June, who's coming in, what the visits are for. The bulk of them is primary care, as we know. There's some quality management and patient outcomes, some of the wellness programming that they've been doing, the readiness for change, heart health, nutrition, safety, men's health, and physical fitness was just most recently in June.
did they give you any kind of timeline on when they would have real numbers to back up the wellness or programs and like statistics on outcomes for those at all, or?
So my understanding is that they are working on the full year's report, which I believe encompasses all of that information. They were not prepared for that for this meeting. She told me that report would be available in August. So my intent would be to, once we get that, obviously, to have them come in and present that to the board.
So we know, and is the clinic open 6 days a week? It's open like a half a day on Saturday, I think?
Yes. I believe that's
Half a
accurate,
day?
yes.
So 5.5 days a week. So anywhere from 277 patients to 164 patients a month for 5.5 days. And the PCP capture is saying that there's 395 people that use the health center as their primary care provider, and 98 of the people in this overview that use a community provider as their PCP, but they use the clinic in some way.
Correct. That's absolutely correct.
Do we know if they've ever changed their satisfaction survey? Because they're still at 99%, and I think the last survey we looked at had things like, do you like the fact that you get in there 3 minutes or less? And
Not to my knowledge, that has not been changed, but I can verify that if you'd like.
because I know that there was a really long list of questions, but I think what we got was all of the questions that were available, but not specifically the questions that were being asked to our group, to our district.
That's correct. Correct. They have a system that allows for, and you're absolutely right, they gave us a list of some crazy number of questions, but in reality, the ones that they're asking the Lake Havasu community was a much smaller number. But I will ask that question.
Thank you.
And on these reports, we don't need any kind of action. These are just for your information.
That's good to know. Does anyone have any other questions about the reports at all? And we'll make copies, we'll make these available on the website?
The reports?
Post these?
Absolutely.
Item 12, administrative, that's you? Your fifth hat? or
That's
fourth
me
hat, or
too, that's
Whichever
right.
hat you have on now.
Consultant had it back on the
Consultant, okay.
Yes. Sorry, making another note. Okay, so I have quite a few things here on the administrative update, primarily follow-ups from the previous meetings, and then I do have a couple things to update you on that aren't on this list, and I'll try to be quick here. So on the over-the-counter medications covered at CVS, on the CVS formulary, when we were meeting in May, one of the things that the clinic asked was whether the trust board's intention was to discontinue dispensing all over-the-counter medications, because they indicated that they were only dispensing those which are being dispensed through CVS, through the formulary. And so the question became, what in the world are we dispensing under the formulary that was being done at the clinic? And the answer turned out, it's only those things that are required to be dispensed under the healthcare reform. So if you go to CVS or any of the pharmacies under your prescription plan, you do have to be provided any of those over-the-counter medications. And I have a list of those for anybody who's interested, but the decision by the board at that time was to eliminate dispensing any over-the-counter at the clinic. So that has been stopped as of 7/1. Questions on that? We had a call to the public at the last meeting, the last public meeting. I think the last meeting was an exec session. Jeff Gost actually asked a number of questions. I don't think he's here today. But I have responses to almost all of the questions he asked, with the exception of a couple of things that the district will need to answer in regards to how much from the override was deposited into the trust over the last 2 years, and then whether or not the retirees could be placed on an email list to receive meeting notices. So those 2 things will have to be handled at the district level. I'm happy to go over these answers if you'd like me to, otherwise I could just work directly with him on these since he's not here. Up to you.
If we could just make sure that he gets.
Absolutely, yes, I will make sure. Sorry, just making it up.
And was the district forwarded his questions that need to be answered by the district?
Well, I know Mike was here and I thought he wrote them down, but what I'll do is I'll coordinate with Mike and then I'll just get back to Jeff with a single response.
Thank you.
And then we had, in executive session, we heard from a member who had a concern with the Health and Wellness Center. I was asked to go back, to bring that concern back to Cerner and let them respond, if you will. Again, I don't know if you want me to go through this in this format or just get back with the member. Up to you, it's all in your memo.
Does everyone in the audience have a copy of this?
They do.
Okay,
I mean, anybody who took one of the packets.
okay.
Anything further on that one? Okay, so then the couple of things that I don't have on here. I think I reported at the last meeting or the meeting before, there's been a few, with respect to the lab fees at the clinic and using the Blue Cross Blue Shield network versus the Cerner contract with LabCorp. We ran into an issue in utilizing the Blue Cross contract in that Gillsbar notified us that they didn't have a way to determine when a claim came in if Cerner was the location so that the claim could be processed correctly. So after several months of working together, we finally now have identified a way to do it. So it will be done, but the setup on LabCorp side takes about 6 to 8 weeks. So we should see this. Unfortunately, it's not going to go into effect until probably, that's good, September. But we're working with Joyce on that one, and so we'll keep you posted. But we did find a solution, so that's the good news.
So for clarification with regard to utilization from an employee perspective, it was cheaper for us to still have our lab work done at the wellness center, or it's cheaper for us to have our lab work done at LabCorp?
It's cheaper for you to have it done through the center currently. It's also cheaper for the trust if those charges are run through Blue Cross Blue Shield versus Cerner's contract.
Okay, and we don't have to say or do anything for that to happen now?
They're taking
Yeah.
care of it for
Yeah.
us.
All done, yeah.
And so
It's an internal thing.
Okay, and will it be retroactive back?
It will not be retroactive that I'm aware of, Joyce?
No.
No.
Okay.
And then the other, I have two more prescription changes with CVS. You guys made some copay changes effective 7/1. CVS contacted me last week and let me know that there were some papers that were supposed to be signed that were never signed and returned. As a result, they did not implement the copay changes. So anybody getting their medications right now is still paying those lower copays on the generic at retail. There's not a specialty copay in place, and I think it was a mail order copay as well, if I'm not mistaken. We very hastily got those documents signed, got them back over to CVS. The programming has been almost completed. They say that they'll be up and running by Monday, the 23rd. Because that was an error on our side, and CVS's quite frankly, but regardless, we're taking responsibility for that. So we're going to have them run a report for 7/1 through 7/22 of any medications that were dispensed that had a wrong copay, and ECA will be making that whole. So the trust won't lose any dollars as a result of that situation. And then last but not least, I put on your tables the final budget. Now that we have approved the reinsurance contract, the budget is there. keep in mind when you look at that, and that just lays out everything that we did in those earlier renewal meetings back in February and March. But remember, when you're looking at the rates that are listed on that budget, that those are not the premiums that are being funded by the district. That's what was adopted because they were actuarially correct, but the funding is different. And so we'll be monitoring that as we go, and that'll be part of our strategic discussions as we go forward, is what did we mean to be getting and what were we funded and how does that all look as we move forward. And that is all I have on the admin update. Happy to answer any questions.
Is there a way for us to put this final budget number next to what we're actually funding? Because we were looking at about a 24% recommendation or recommended increase, and we did 10%, I think. And I think it would be, wasn't it 10?
I think that's right, yeah.
I
So
think
just add the adopted.
I'd just like to see them side by side, and I think it's important for us and everybody in the district to be able to see that differential, because you know, we're going into the year 15% behind the 8 ball, so to speak.
Absolutely.
And
I will make that change, and then I'll send you an updated final budget. It's not going to change the budget. I'll just add those columns.
Just so that we have the side by side.
Absolutely.
Because that way, I guess for me, it's just a reminder that, you know, we're not doing this. We're actually doing something less or different. And because I keep remembering that presentation that you did at the PAC, which I really appreciated, and it showed we're still at a $600,000 deficit shortfall this year, and you know, that's sort of a in-your-face number that's kind of scary. So.
Yes, I will do that.
Okay, I appreciate that.
It's an easy one.
Scary.
And that's all I have for that one. Again, no action on that. It's just for your information.
So item 13 is election of officers.
I'll make a motion to Marcia Cox be chair.
Second.
I didn't even get the pen out yet.
Forgot to put your other hat on. Any discussion, questions?
You're between everyone.
Got somewhere to be.
No.
We are moving along.
Yeah.
Would you like me to do the roll for that one?
No questions and call for a vote.
Dr. Hattassi,
Yes.
Amy Barney,
Yes.
Hal Christensen,
Yes.
Marcia Cox.
I vote for myself.
Yes. Well, I mean, I'm asking the people who made the motion, so that, you know. So that passed unanimously. So now we have a new chairperson.
Right. Thank you for that. And now we need to elect a vice chair. So I make a motion to nominate Hal Christensen for vice chair.
Second.
Questions, comments? Questions or comments? Call for the vote.
Dr. Hattassi,
Yep.
Amy Barney,
Yes.
Hal Christensen,
Yes.
and Marcia Cox.
Yes. It was going to carry anyway.
That's right.
That motion.
I'd just like to, I know that, I'll certainly do it. And I think maybe I'm on the board till 2020. Maybe a year from now, maybe, see if anybody else would want to do that too, just to be fair to everybody else.
And I'll have to go back and look at your trust doc. I don't recall if you've got a timeline on that, whether it's something you do annually or not, but
I think it's annual.
I think it is.
yeah, that's pretty common.
Yeah.
Sure.
But you're going to want to stay.
Through 2020. That's
Yes.
my commitment. I honor my commitment. So
with the election of officers, Madam Chair, The chairperson also is supposed to appoint a recording secretary. Carrie Thompson had appointed Naomi Morgan as the recording secretary. I believe probably for purposes, since you're the new chairperson, I think you actually need to designate someone also.
Okay. I'm going to designate ECA and anyone that represents Aaron Collins and Associates to be a recording secretary at each meeting.
And that one I don't think needs a vote because it's an appointment by the chairperson. So.
Okay. And with that, we can make sure to do this. I guess I just want to make sure that all of the meeting notes get posted timely and that the agendas get posted timely. And
Yeah, and we don't have access to, obviously, the website or the ability to post here. So typically what we do when we work in the capacity of recording secretary for others is we prepare the agendas, obviously make sure they get to the right people so that they can be posted, and same with meeting minutes. So we'll continue to do that, and then I'll follow up and make sure that everything's up where it's supposed to be.
And so I don't know, and maybe, Mrs. Asari, maybe you could answer the question. I don't know if it would be appropriate to send that to that information to Ms. Flores, or just to send it to Mr. Murray and have him forward it.
I didn't hear you said first to send it
To send it to Gina Flores, your IT, to post things, or should I send it through the business office?
Send it through Mike.
Mike. I think that's probably the best. Next, future agenda items. I know we even listed a couple.
Right, I have the GDK contract and then discussion about a cash versus accrual basis for reporting. I don't have anything else. Oh, GASB. I don't know when that's going to be done. I mean, that's certainly a future discussion, I just don't know when that.
Not necessarily.
Yeah, not necessarily next, right.
And I know that we were waiting for some information from Mr. Shumming on the comparative analysis.
Correct.
That we were getting from Cerner to compare with the Jones Bar data.
Correct, and he has actually completed that analysis, and we're in the process right now of discussing that with Cerner, as we agreed to do.
Okay.
So I'm limited in what I can say at this point in time, but we will be bringing that back to you. I think as part of that contract negotiation, just ongoing contract negotiation discussions we've been having.
Okay. Okay. Anything else?
I had a question for Diane after the meeting. If you have,
Well, Amy, welcome. Welcome to the family. Welcome to the family. If there are no other questions or comments, we'll adjourn the meeting at 6:42. Can't read that one.